Value investing. Now this term you might have heard n number of times. And in this video, I'm going to simplify what is value investing, how you need to look into each and every aspect when you are choosing to give a value portfolio to your client. And then I am going to dive into how you are going to select a right value mutual fund scheme for your client. Hello everyone, I'm Shobhit. I'm a FinBiz growth expert and founder of FinBiz Growth Club. We are an aspiring community of new age mutual fund distributors who are determined to change how India invests. So first, let's define what is value investing. Now, value investing in a simple layman language term, if I may say, it is buying any asset at a cheaper price than its own intrinsic or current value. Now, just to simplify or give some different dimension to it, any asset which we are buying, which we think is having more worth than what it is currently priced into the market, that is value investing. Now, coming to mutual fund perspective, and especially from the equity investment point of view, any stock you are buying whose current price is less than the actual value or worth of the company, that is called value investing. So once we are determined that value investing is buying any asset less than its actual worth, then let's define what is a worth constitute of. So if you want to determine the actual value or worth of a company, there are two things which we need to keep in mind. First, the fundamental aspects, which means the book value of the company or the P ratio of this company, the cash flow of those companies. All those are fundamental numbers which is going to be throwing some numbers which will give you actually what is the financial worth of that company. And with that, you need to also consider some of the non-financial aspects like the brand value, which will also play a vital role determining the actual worth of the company. Now, the other aspect is subjective aspect like brand value, future growth potential, competition, and how customer look at the product or services. So these all things are going to constitute as what we think is the actual worth of the company or value of the company. So once you are able to get this, the third question which we need to ask is, once we know what is value investing, once we know what is the worth of the company, then why the price of the company is less than its value? Now I'm going to run through some of the reasons because of which the price of the company is less than the value. So the first and very obvious is the herd mentality. You know, in the market, if somebody is buying or most of people are buying something, everybody rush to buy those assets. And because of this, the price of the asset is going to go up. And even though some other stocks who is having good fundamentals, but if they are not in the flavor, they are not going to go up. The prime example, if you look at the today's market, is Adani Group of companies. So irrespective of the fundamentals, the stock prices are going up, and that can be considered as herd mentality, very good example. The other may be market correction. So because of COVID or some untimely situations, if there is a panic selling, because of that, the price of the stock comes down much below the value of the stock. Other can be out of flavor. So ITC is the prime example of it. Even though company is doing very well, fundamentals are very good, cash flow is very good, still people are not buying or price of the stock has been not appreciating that much, and that can be also a reason because of which the price of the company stock is going to be much lesser than the actual value. Fourth can be bad news. So if any regulatory issue comes up, if any government changes in the regulation happens, then all those things are going to be impacting the price of the stock. Then the cyclical nature, if some business into the cyclical mode, some cycles the prices of the stock is going to go up to a larger extent, and then other time it is going to come down. So these all are the reasons why the price of the stocks may be less than the value, and that is why if we are looking to buy those assets whose actual worth or net worth is much more than the price which market is factoring in, then that investments are called value investment. Now, you need to be very clear that what value investing is. I hope I have given you some ideas and some simple examples to make you understand that what is value investing. Now, once you are clear on that, then as a mutual fund distributor, if we want to give a value portfolio to our client, if we want to give a portfolio which will have lot of value investment being done, what all things you need to keep in mind. The first and most important thing which you need to keep in mind, my dear friends, is you need to consider market is not always efficient. Now, this means what you need to understand, even though the price of the stock is very low compared to the actual worth or the value of the company, it may be that the price realization in the future may not happen on a very fast or on a hour time basis, if I may say. So it may take more longer time than what we can anticipate. Even though the prices are down and we think that there is a huge value, to market to appreciate that fact, market to come to in terms with those facts, it may take some longer time. And in that case, you and your investor has to wait for a longer time to get the actual appreciation on those portfolio. So you need to be aware that we will don't book a portfolio where you are going to give all the value theme investments into your client, because it may happen that it is going to take a little longer time in the future, and that can impact the performance of the portfolio of your client. So as a very famous quote by John Maynard, he says, the market can remain irrational longer than you can remain solvent. This means it may be that we have bought a asset or investment thinking that the prices is very low compared to the value, but the appreciation would be having a very long time to play into. Then other thing you need to keep in mind is the margin of safety. Now, as I told you, the discovery by the market of the actual value of the stock may take some longer time, and for that you need to buy those investments where the value is much higher than compared to a price. Okay, if that is the case, then the chances of price discovery of those assets is going to be much quicker than if you are buying some value investments where the value and the price differential is much lower. So what I would like you guys to understand, that whenever you are making a value investment portfolio for your client, always make sure that there is a huge value gap between the actual price and the value of the company, because there the price discovery would be much faster and much sharper. Okay. The other thing which you need to keep in mind, there are a lot of investment which may seem as a value trap. Now what this means, we may think that the value of the stock is much higher than the price, but there may be some businesses which are cyclical in nature, and those cyclical businesses for a short period of time, the prices may have come down because the investor community thinks that now the downturn has started, and we may think that company is doing very well and prices is down and we should get into. So cyclical business, we need to understand the actual cycle of the fund and then make an informed decision. Then say pharma companies. In pharma companies as well, if you see if any drug is going to come out of the patents, then those stock prices are also going to be corrected for a large extent. And those information, if we are not having, then even we see the prices coming down, we would be tempted to buy those stocks. But in long run, the price correction is going to be longer. So all these value traps also we need to keep in mind whenever you are advising a value portfolio to your client. So once you are clear on how and what all things you need to be keeping in mind when you are advising a value portfolio to your client, let us come and dive into how you need to pick a value fund for your client. What are the technical parameters which you need to look into so that you can pick a right mutual fund scheme for your client's investment. So I have taken some of the data from Value Search. These are the all value funds in the market. The criteria which I have used to shortlist this fund is that at least the fund should be in the market for 5 years, and they should be having a minimum AUM or total asset base of at least 700 crore. So this criteria I have zeroed down this fund. So I hope you are able to see. Now, if you look at these funds, the performance of these funds are more or less varying between anywhere between say 10 to 15% in a 5 years time horizon. Now, I am not going to dive into much into the return part of it because it is going to be much more subjective. But what I would like you guys to do is whenever you want to pick a value fund for your client, the first thing which you need to look into is the standard deviation. Now, why I want you guys to look into the standard deviation? The simple logic here is this. Whenever I am buying any value fund, then the price of the stock is already at a very low base or not appreciating for quite a bit time. And if that is the case, I don't want those funds to have a lot of volatility because I am looking at those investments where already market is not appreciating the value of those company. So when I am entering into that, my objective is that from here, the upside would be much higher. So if that is the case, the standard deviation of those funds should be a lot lower or lesser volatile the portfolio should be, because that should be a good way to start with. So whenever you are picking any fund from the value category, I would highly recommend that choose a fund which is having a lower standard deviation compared to the peers or in the value fund category group. The second aspect which I want you guys to appreciate and look into is the Sharpie ratios. Now, the Sharpie ratios of the value funds especially, I would love you guys to consider those funds where the Sharpie ratio is in the top 5. Why? Because Sharpie ratios are going to give you those ideas or those portfolios where risk reward ratio is very high. Now, as I told you, in value category investment, it is very likelihood that we are going to fall into value trap. If the Sharpie ratio numbers are good, are in the top 5, it means fund manager is not getting into a value trap where he is going to invest in some stocks, assuming that those stocks are going to play out well in future. But actually, there is some bigger story behind this. Because of that, the stock is not appreciating much. So Sharpie ratios also should be looked into, and I would highly recommend that we should restrict our suggestion to our clients in terms of value portfolios into the top 5 schemes which is having the highest Sharpie ratio. So standard deviation and Sharpie ratios, I think, is going to be a good way to start suggesting schemes to your client from the value category. So I hope this is going to give you some ideas first to understand what is a value fund. Then I also given you some ideas as how and what should you keep in mind when you are advising a value portfolio to your client. And the bottom line is, don't suggest a value fund to your client if your client time horizon is less than 5 to 7 years in equity category, especially per so, because the real value discoveries can take some more time or longer time, more often than not. Okay, so that also you need to keep in mind. And then I have given you some raw data. I think that is also going to help you in structuring your portfolio or suggesting a value fund to your client. So I hope I have given you some new thought of action, some new dimensions, which is going to be helping you in choosing a good value fund for your client. Thanks for watching. In case you like the content, I would love you guys to hit that thumbs up button, subscribe to our channel, so that whenever we have something new to offer, you guys will be first one to know. Thanks for watching.